Hi everybody, Alex here from Expert4x, and in today's video is an exciting one for US traders because we are going to show US traders how to use our Forex robots, and we're going to show them how to find settings for our robots specifically for US traders. Now these settings will apply to all traders because if it can get through the filters that the US brokers place on their traders, you can use those settings anywhere else in the world. Alright, so the first restriction is the FIFO restriction on US traders. That's very easy to overcome when you're trading only one trade at a time, and that's what we're going to be doing. There's also hedging restrictions. Again, if you're trading one trade at a time, no hedging problems. And then there are leverage restrictions, and what we're going to be doing, we are going to be testing using 50-to-1 or 1-to-50 leverage. So we've overcome the US problems. So let's get started. The first thing I must stress is that I am using imported historical data, purchase data. I've been using this particular service for over 7 years. Here you can see this video, in fact, was made 7 years ago. So I'm perfectly happy with my investment. It's costing me around about $10 a month, so it's not a fortune, but it allows me to test any robot I want to and any instrument I want to. It has, the history basically has all the instruments you could possibly think of trading. So I will leave a link to this particular service in the description of the video. I'm not an affiliate of this service. I endorse it because I've been using it so long. And then today we're going to be looking at the Tradeable MACD. Now there are a whole lot of other EAs that can be traded using the approach that I'm going to show you today. So I'm going to use the MACD as my kickoff point. I will make other videos about other EAs that are tradable by the US traders. And there are lots of them. Okay, so to do that, I'm going to dial into my testing server, which is not the one I'm using currently, but I'm dialing into it, and I'm going to be using it remotely during this session. The other thing about this video, it's a live video. I'm going to actually show you the process that I use when I am optimizing these EAs. So there we are. We have the Tradeable MACD loaded. I'm going to be using the Euro Yen. I'm going to be using open prices, but we will flip to tick data at a later stage. The Euro Yen generally has a 2-pip spread, and I'm going to be using the 1 hour time frame. And by the way, I don't know if these are the best currencies and the best time frames to use, but I'm using them to illustrate the process. And then I'm using the tick data package. Now when you use the tick data process, you'll see these two blocks appear on your strategy tester. They are not there if you aren't subscribed to this process. So let me click on that, and then you'll see I'm using the Euro Yen. There's a lot of data. You can actually go back to 2003 for most of the data. And then what I want to show you is how we get around the low leverage problem. So here are the tabs. So I go to advanced, and then I say, yes, I want to apply leverage, and I only want to apply 50-to-1 or 1-to-50 for this particular test. So it is going to take the data and assume that the broker is providing 1-to-50 leverage. So that gets over the third point that I mentioned earlier. So now we're ready to do testing for the US traders. Just click OK. So firstly, let's go to the testing side, and what I'm going to do, and that is one of the things that we have started talking about in the linking service, is I'm going to use an account of $300 because that's one of the things we want to offer US traders. We want to offer them small accounts with low leverage and that comply with the US broker requirements. So there we are. We're trading $300. We're using the generic algorithm to do the optimization. A bit like AI, it learns which settings are best as it's going along. And then we're going to look at the inputs. This view that you see right here is a testing template. So it has the values that will be traded in this column. Then it has the testing ranges in those next columns. So you would start at 4, skip or step 4 and stop at 24. So when this test is run, it will test 4, 8, 12, 16, 20 and 24. So that's how that start. And then the beauty is you can test all of these at the same time. So I've set up a test which I say for these first 3 items, start there, step there and stop there. So it will go away and optimize those levels. So let's go down, and what I've done is I'm keeping it as simple as possible. I'm not adding all the bells and whistles to the trading. I'm going to go for the bare minimum. Okay, so there we are. And then here is the key thing for US traders. Maximum total trades open at one time. 1. So that immediately cuts out hedging and FIFO and all those kind of things, and that's the magical US setting. Okay, then we want to know what the stops and targets should be. I'm testing a range from 10 to 150 for the stops and from 10 to 300 for the targets, because I'm trying to go for bigger targets than stops. And then it says, okay, what kind of lots are you going to use? Now, in this video, we're going to do 2 types of tests. We're going to test manual lot sizing, and we're going to test equity lot sizing. So I'm starting with manual lot sizing. I'm saying, okay, we're going to test that amount of lots, but we're going to increase it by the same amount until it reaches 0.05. So I'm testing a wide range of lots to see what is the optimal amount of lots to trade. And then all the rest I'm ignoring: break evens, trailing stops, dynamic targets, all that stuff I'm ignoring. And I'm trading from 0 to 24 the whole day long and every day of the week. I've cut down and simplified the trading as much as possible. So we're only looking at the MACD settings, the stops and target settings, and we're looking at the lot sizing. How easy is that? That's 6 settings that we need to worry about. Okay, so let's start the optimization. So we go, okay. Now the first thing you do before you do optimize is you just run a run that isn't optimizing. So just to see that the system is working. So we're going to do that. I've unclicked optimize and I'm clicking start. And I'm using open prices, so it's run very quickly. And we look at a report. Oh yes, and look at that. Just these basic settings that are already there have taken the balance of $300 to $600 and $650, more than tripling the account, because that would take the account to $900. But the profitability is double the account. So that's a great start. So let's go and do the actual optimization. So all I have to do is click on that, and I've got open prices. Now, one of the other reasons I'm using open prices is that this robot does its decision making on the close of the candle. So it's actually almost aligned with open prices. So let's have a good look at what happens. So I'm going to start the optimization. This is quite a powerful computer. It runs quite quickly. It's only going to take 2.5 minutes to test over 10,000 options. It's actually testing 2 million options, but the genetic algorithm reduces it to 10,400 options, and it's going to take 2.5 minutes. The other thing that I failed to mention before the start of this is when you go to the optimization results and you right click there, it says, do you want to skip useless results? And I have ticked that one, and you'll see why. So I'm not interested in seeing the negative. Normally I would, but for this presentation I am going to only want to see the positive results. And here you can see the progress as it's happening. Let's just move it up properly. Okay, so we've already got up to $2,000 dollars, so that's taking $300 to 2,000. But let's let it run to completion. Okay, it's finished the run, so let's go and have a look at the results. So the results aren't all that much better than the initial look that we had. It's basically saying that the top profit is 2,790. Now, to check this out, what I do is I right click on this, I say set input parameters, I set it, and then I go there, and these are the actual settings that resulted into 2,790. So those are the settings for the MACD, the initial stop loss and target. See at the nice ratio that is, and then the initial lots, 0.12 lots. Okay, so that's the starting point, and I'll just click on OK. And we'll look at the results again. Here's where the refinement of the results comes from, and you must watch this very closely. Most traders will take the top result and say those are the settings that I'm going to use. But I don't do that. I right click on the results and I say copy all. Then I go to Excel and I copy it all in there. And you'll now see why I only went for positive, because the positives and the zero results will just mess up the figures that we're working with. So there we have the results copied across. So what I'm going to do here is I'm going to add a column, one column. And the column that I'm going to add is going to say, what is the ratio between the drawdown, which is that one there, and the actual income? In other words, how much drawdown has that income required? And I'm going to then just format that into a percentage. And we say, okay, that's 14.9. And then what I'm going to do is I'm just going to drag it down to the rest of the way. Okay, so now column H contains that formula, that percentage of drawdown to earnings. And that is a way of evaluating drawdowns. If your drawdowns are low compared to your earnings, that's a very good thing. So even the first one is actually very good. But let's first test this. So I'm going to sort the database, sort, and we're going to go by column H, and we're actually going to go from smallest to largest, and we say OK. Okay, so here's the final sorted results, and it's basically saying that you can generate $1,000. Remember, we're using $300 to start with, so it's like 300% return, and only experience a drawdown of $150. So that is why you don't actually just use the first one that comes up. You go for the smallest one. Now, interestingly enough, the first one that came up was that one, which is not bad at all. It's a 14.9% return on drawdown. So that's not a bad result either. So I'm in fact going to go for the first one there. And the reason for that is that we have a $300 account. What this one's saying is the maximum drawdown during that period was $150. So I'm actually well within my account balance. And all we need to do now is find 1193 in the results. So let's go and do that. And to do that, we just sort the passes. 1193, I think it was, and there it is. It was in fact 1119, and there it is with the low drawdown that we have. So what I'm going to do is I'm going to actually put that one in as our selected settings. So we put that in, and we open the template up again, and there are the MACD settings, There are the initial stops and targets that it's come up with, and there it's come up with quite low lot sizings. So these are, for all intents and purposes, very conservative settings. So what I'm going to do is I'm going to say OK, and then we run those settings, because they're in there now, and we run them without optimization, and we say, okay, there is the result. So now let's have a look how that compares with tick data. So now I go over here and I go tick data. You'll see that the tick data in fact goes a lot slower, and that is why I do my optimization using open prices, and then only at the end do I convert the results to tick data. So let's hope that the results are reasonably representative. Okay, the tick data run is finally finished, and it took almost as much time to do that run than it took for the whole optimization run. And let's go and have a look at the results. So the results say, oh, fine, they're only about $30 different. So that's why I said it's pretty close. There's your 99% accuracy. And there we have our absolute drawdown 126 and our maximum drawdown 161. Now these are really good settings. Firstly, they produce 300% return on your money. Secondly, they don't threaten your account. The biggest drawdown is $160, and therefore these are nice solid settings that you can go and plug in to your first demo account to test these settings for a few weeks. So let's do that. So what we do is we go, here are the settings that we want to save. We say save, and we'll say I'll open a special folder for this. This is the Euro Yippee, and today is the 1st of February, and it's a $300 account, and it's for the year of 2024 that we've tested. So that gives you an idea of the and the actual set file will have the same name, Euro Yippee 1 February, and in fact it's a $300 account, and it's 2024, but it's I'll just 2024, but I'll also add that this was fixed lots. Okay, and we go save. So now if we ever want to find that again, we just go to this one, and there it is, and we away. Okay, so let's just cancel that. So there we are. All right, so that gives you an idea that you don't only take the first and the best, you actually do the calculation that I've done. Now there is another way, and I'll just show you that one very quickly, is you could look at these optimization results, and you can sort them by profitability. There we are. There we've got our top one at the top there, and you can say, all right, let's have a look. Oh, the drawdown is over $300. So let's say we divided that drawdown by 2. That would bring the drawdown to $200, which is inside of our initial investment. And all we need to do is reduce the lot size, and the lot size you can see here is 0.12. All we do is reduce that point to 0.06, and we'll come close to getting half of those results at half the drawdown by just reducing the initial lots. So that's another approach to find interesting settings. You could do that too. I'm not going to run that option, but just remember that that's another approach that some traders do. But it is important to try and keep your drawdown below your initial investment. Okay, so now let's move on to a slightly more aggressive approach. And this approach is almost based on a maximum lot approach. So here we have, before we used to use manual lot sizing. Now we're going to go to, I like percentage of equity. We're going to go to a percentage of equity. So now the EA will lot size according to the percentage of equity. And we don't know what percentage that is, so we're going to unclick that one. You don't need it anymore. We're going to click that initial risk percent. We don't know what it is, but we can start at 10, increase it by 5, and go to 50. So that's what we're going to do here, and we'll do a re-optimization of the results. And let's see what happens to $300 using this approach. Okay, and we now click on optimization. It will now go and optimize everything that we've asked it to optimize. Whoop, and the one thing I forgot, is to change that to open prices. It would literally take days to do the tick data optimizations. They're close enough to the 90% quality test. So let's have a look at the results of this particular one. Okay, that run is finally completed. It took almost the same as the first optimization run, so not too bad. Let's go and have a look at the results. Okay, so here are the results for that particular run, and almost obviously that the results would be dramatically higher. Now, if consider we used $300, a 29,000 result is amazingly high. So what I'm just going to take the first one and just put it in and see more or less what kind of settings came out there. And those are pretty standard. Again, a small stop, a large target, and then the risk factor was risking 20%. So 20%. What it's saying is a risk 20% on every trade. That's basically what that comes, and that's why it's so similar to the maximum lot process. So what you would do here is you do exactly the same as what we did earlier. I'm not going to do that because you now know the process. You copy this to Excel, sort out the relationship between the drawdown and the profit, and you get a more acceptable set of settings. Now, in this case, you're not going to find drawdowns under $300 because the equity increases and increases and increases, and therefore your drawdown will increase and increase and increase. But that percentage is important. You want a low percentage compared to the income that is generated. So you would follow exactly the same process. So please take a note of this template because it's a pretty handy template. Now, one thing we haven't done is we haven't compared those results with the equity results. Now, there might be bigger differences with this run, so let's just have a look. Okay, so as you can see, the results are actually quite a lot lower than the original results, but they are still very, very acceptable. But obviously a lot riskier because look at the maximum drawdown is $10,000, and that is most probably the scary aspect of using percentage of equity. So my suggestion would be to use the fixed lot system. It's conservative, it has low drawdowns, it's manageable, and it is also an approach used by prop traders. This is how prop traders get low drawdowns with high returns. They optimize their robots this way that we've just done it, and then they can trade prop trading opportunities because they know that the drawdown maximum was, let's say, 50% of the capital in total, whereas the income was maybe 20 times more, a lot more. Okay, so now that you know the process, what you can do is go and test this process on more currencies and on more time frames. And that is going to be your homework. And this approach opens up US traders to this fantastic opportunity. So what we follow today is this process of becoming a competent robot trader. Is we've gone through this particular process, we've optimized the robot, and we've found the best settings. So that this is the process that one would normally follow. So the next 2 steps is basically to create a trading plan, and also then to forward trade a number of the strategies that you identify this way. So you might find different strategies on the pound yen, you might find more on a different one on the Aussie USD, and so on and so on. So in the end, hopefully you'll come up with about 10 different really good strategies that you can then plug into 10 different demo accounts and run them for 3 weeks or so to see how they go. That is the process that you would follow, and then you'd monitor them and correct settings where appropriate. Now, I really hope you found this video interesting. It has been a bit of a longer one, but it does open the US traders to fantastic opportunities trading Expert Forex Robots. Links to anything mentioned in this video will be in the description of the video, as well as in the first commentary of the video. So from me, Alex Employee, cheerio.